This video brought to you by Forex Internals.
Hi, and welcome to the Forex Internals MultiBar Divergence indicator demonstration. Today we'll be showing you how the MultiBar Divergence indicator works and what the settings do. However, before we get started, there are two things I'd like to talk about. The first is that for all of our internal indicators, such as MultiBar Divergence, we need the 1 minute data for all of the major currencies loaded. And to do that, you need to open up a chart for the Aussie dollar, the euro dollar, the pound dollar, the New Zealand dollar, the dollar Swiss, the dollar CAD, and the dollar yen, and make sure that all of them have 1 minute data as loaded, so that they're M1 charts. This is because MetaTrader requires 1 minute data in order to form any other time frames bars. So when you want to form a 5 minute bar for the Aussie dollar, they load all of the 1 minute bars and then create a 5 minute bar off of that. So for us to use that data, we need it available. The multi-bar divergence indicator will plot the momentum or velocity of the currency in question, in this case the euro dollar, and then compare it to the momentum of the internal strength of the euro versus the dollar. And this way you can see if the internal strength of the euro dollar is matched by the actual price movement of the euro dollar. So let's go ahead and take a look at what that looks like. We will drag the multi-bar divergence indicator onto the chart and come out with the inputs. We're actually going to make sure that under common, the allow DLL imports is selected. All of our indicators and trading tools need allow DLL imports to be selected to work. We'll go back to inputs and now walk through the settings. The time frame def is the definition of the valid settings for the time frame setting. In this case, 0 means the chart time frame. 1 would mean a 1 minute bar, 1 minute time frame, etc. We're going to use a time frame of 0 to use the charts time frame. Periods is the number of periods back that we want to look at the momentum or rate of change on. We're going to use 8. We could also have multiple ways to look at that rate of change. If we have rock type or rate of change type of 0, we will just use a standard 8 period back rate of change. Otherwise, if it's equals 1, like I'm going to set here, we will use these two settings, which is the fast and slow periods. If we have a setting of 1, we are actually looking at the acceleration of change by looking at the rate of change over a slow period, 5 periods in this case, versus 13 periods, and then comparing the two to see if the shorter time frame is accelerating away from the longer time frame. I actually like a little bit more of a difference, so let's look at 5 and 21. Then the next group of settings is how to smooth or analyze the results and remove some of the noise that appears in the data. Smoothing type is the type of average to use. We're going to use a 1 or an exponential moving average. We're just going to smooth that for a few bars. Let's set that to 3. This removes a little bit of the noise. Price type def describes the type of price that we can be calculating on, the high price or the low price or the close. We're going to use a 5, which is the typical price, and the typical price is the high plus the low plus the close divided by 3, so it's sort of the average price of a bar. And for calc type def, you can use 0 for linear sum or 1 for simple average. Since we're comparing the currency's momentum versus the internal's momentum against other currencies, I would use the average so that we can compare sort of apples to apples. I do not recommend using a 0 for this setting. Calc current pair indicates whether we use the current pair, in this case the euro dollar, in the internals calculation itself. We have this defaulted to false, and we strongly recommend that it stay that way. Let's go just look at the colors we're going to be using. Red and green, and I sort of prefer black on this white background here, so it's easier to see. We'll hit OK. You can see that what comes up is a histogram here, a red line, and a green line. The red line is the momentum or strength of the move of the euro dollar itself. So in this case where my cursor is, it's at a positive 0.26%. If we come up here and look at the green line, that is the internal strength, the euro minus the dollar. The euro compared to all other currencies but the dollar's strength, less the dollar's strength compared to all other currencies. So in this case, it's a positive 0.38775. And the histogram down here is the difference of those two things. So you can see here the internal strength is higher than the pair strength itself. And you can see that during that time frame, the pair sort of rose a little bit. The internals were drawing the currency itself higher. So one potential way that we look at using this is if you come down here, you can see that the internal strength is significantly negative. In this case, I believe it's minus 0.35, and starting to rise over these bars. And in the euro's dollar strength as the currency pair is negative but rising. So sort of this rise, as they both start rising, it indicates that you might have a general uplift in the euro dollar as a whole. And if you look here, you have a flat period, and then it turns up, indicating that the price move and the internals move support each other. I hope that helps you understand what the FXI multi-bar divergence indicator does, and we suggest that you go to www.fxinternals.com to look at other videos for other indicators and trading tools, and we wish you the best of luck in trading.